Hello, everyone. Today on the final bar, we'll talk the resilient market that continues to go higher. We talked on Friday about the market trend model, short-term positive, medium-term positive, but not quite triggering positive on the long-term side. Today, if this was the end of the week, it would trigger positive on the long-term side as well. So we continue to have this upside, but so many stocks overbought. And part of my weekly review of the S&P, which I did yesterday, found a lot of names overbought, up at resistance. So there's sort of this balance between a resilient market that goes higher with limited risk reward. So what we're going to do today, try to break down those themes from a top-down level, from a bottom-up level, see what we can find. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us every weekday after the close to make sense of the markets from a technical perspective, focus on the momentum, focus on the trends, see what's working, see what isn't, and most importantly, connect the short term of today with the long-term perspective. And Mondays are a special day on the show because we hit the markets from a top-down level, a bottom-up level, and also look at sector rotation in the middle. And you know, I think what you're going to find as we get into the meat of the show, as we go through each one of those, is from a top-down level, you have a market that continues to push higher today with the S&P finishing, over 3230. But then you have a lot of stocks on an individual basis approaching key resistance levels, testing their 200-day moving averages, overbought. So what's the balance? Which one of those stories is going to win out? And what we'll try to do is look at those themes together and see what we can find. Now, we have so many great guests coming up on the Final Bar to help us try to answer those questions together. This week is a pretty solid week. Tomorrow, we have Dana Lyons from the Lions Share Report. On Wednesday, Mark Ungewitter from Charter Trust. And on Thursday, Xenia Taubina from XT Financial Services. Earlier today, we had a conversation with Price Headley that was on our sister show Behind the Charts. It's more of an interview-style show. Talked with Price about his experience with the options market and just how he learned the technical toolkit, how he applied it. And I think those conversations are fantastic to learn from some of the technical masters in the industry, the guys that really know what they're doing, and see how they apply the craft day to day. Also coming up, just as a reminder, on July 13th, that entire week, we're doing a focus called Charting the Second Half. And it's going to be a series of StockCharts contributors, a number of special guests. They're going to share their outlook for the second half of the year. We'll be doing special events every day. We'll have guests on the Final Bar sharing their comments. We're going to finish the week with a power-packed panel of experts to share their outlook. So you're not going to miss it. Mark it down. A lot of special events coming that week of July 13th. Let's get to our market recap. So as always, the last 30 minutes of the market did not disappoint, injecting some additional volatility just to make the Final Bar a little more exciting. And this day, we surprised to the upside here in the last 30 minutes with a lot of buying coming in at the end of the day. You know, it's funny, on Friday, we sort of had the opposite, sort of had this rotation, and the last hour was weaker rather than stronger, showed some distribution going into weekend. Today, we get the opposite. Today, we get this resiliency, this market that continues to go higher. And if you look at the stocks that gained a lot, it's things like Alaska Airlines, Norwegian Cruise Lines, Royal Caribbean. Then you have things like Diamondback Energy, you've got Halliburton. So it was the energy, it was these beaten up groups that have really emerged. Energy obviously has been doing pretty well for a number of weeks now, but financials in the last 2 weeks really have accelerated. But also things like cruise lines, travel related, Boeing, all of these stocks that finished the week gapping higher, chipping away and really accelerating, going exponential, that continued today. So you know, that wasn't just a euphoria going into weekend and then that was it. Today was back to normal. The new normal, quote unquote, appears to be higher. So that pushed the S&P above 3230. That's 1.2% up from Friday's close. Mid caps up even more, 1.8%. Small caps leading the way, 2%. So there's certainly a risk on move with higher risk assets, higher beta assets leading the way higher. Looking at the bond markets very quickly, you had the TLT up just over a third of a percent to 156. 10-year yields down to 88 basis points or so. The U.S. dollar down. That weakening dollar story is something we beat on a lot last week, looking at non-U.S. markets versus U.S. markets, and that downtrend in the dollar appears to continue. In the commodity markets, interesting to note that gold higher. So remember, on a day like today, I find a lot of people oversimplify and they think stocks are up big, a safe haven like gold is going to be down. Not the case. The GLD actually up over 1% today. Silver up even more too, almost 2.5%. So, again, as always, I think the benefit you have from looking at charts is you're not thinking about what should happen or what may happen. You're looking at what actually is happening. And overall, I think that's a really good place to be as an investor. Looking at a daily chart of the S&P here and just putting on our macro investor hat, this overall trend out of the March lows, the big run up to, just below S&P 3000, 2950 was sort of that key level. That was the first really corrective move we had since late March, early April. Sort of had this bull flag of lower highs and lower lows that broke to the upside. We then broke above the previous swing high. We broke above the 200-day moving average around 3,000. All three of those things sort of validated this uptrend, and then we just continued essentially unabated for the last 2 weeks. What's interesting now, again, from me thinking about the big picture, is the risk reward. So, what's the potential upside for stocks? Could we retest the February highs? That seemed very unreasonable about 2 months ago. It seems very reasonable now. That seems very accessible. That could be a week or two, if not earlier, where we could be up at those levels very easily based on the trend we're seeing. The concern, though, is this: the RSI now overbought. It is clearly in bullish range. That's totally fine, but it's overbought. That on its own is not necessarily a bad thing. Markets in an uptrend can become overbought and remain overbought, but it starts to put things on correction watch in my mind. And things you would look at is, are we coming out of the overbought region? What sort of pullbacks do you see from stocks? Do you see any divergences between price and RSI? We are not there yet. We're still in the early stages of anything like that happening. But when we're overbought, that means we're up a lot. That's good if you're long. But it also means you have to start to look for signs of corrective patterns. And when we get to the individual stock work later in the show today, we're going to look at how many names are sort of overbought at key resistance levels. And it's not a small number, folks. It's actually a pretty meaningful number of stocks that are at those key resistance levels. So the question is, are we able to push through, build the momentum, go higher? We'll have to look at those together. But at this point, I think, the short-term trend, the medium trend remains positive. I think you have to assume that that's going to continue until you get some sort of indication that that's over. And I think the overbought condition is the first of a multi-step process that would tell you that the end is near. It can continue to go higher for a little bit further. Absolutely. Now, energy led the way today, up almost 4.5% on the XLE, followed by utilities, followed by real estate. Now, in real estate, you can get, it's sort of REITs that had gotten beaten down in the market sell-off now coming back. So things related to office space and malls and retail places, retail companies. So, that makes sense. Utilities is an interesting one to be at the top of the return list on a day like this, but certainly leading the way higher. On the downside, materials, number one, and then technology and healthcare. So this rotation away from tech and healthcare, both underperforming today, with the S&P up 1.2% and those up 0.5% to 0.6%. Certainly on the weaker side of it. And that's certainly a theme that I saw looking at the individual stocks over the weekend. We talked about some of the groups that are making the new highs today, are making bigger gains in their scooter rankings. In terms of what was weaker, it's a mixed bag of sorts, but I'm seeing things like Charles Schwab. That's a name we talked about because it's gapped up in the last couple of days. You had a series of gaps higher. Friday, though, was a gap up and a down close, which is more of a negative pattern, and that downtrend continuing into today. Charles Schwab, or sorry, excuse me, Sherwin-Williams, Schwab up here, Sherwin-Williams, SHW, rolling over, a little more of a gentle rollover, which on its own is not horribly concerning. It's just everything else is rallying so much that that's going to lose a lot in the relative rankings. Also, Costco, which has been such a non-factor and continues to struggle. Look at that chart for the last couple months, just sort of choppy sideways. And this is when most things are rallying significantly. I'd encourage you to take a deeper look at some of these industry groups. We're going to look at sectors here in a minute, but airlines up again, almost 9 to 10% today. We're going to look at Alaska Airlines, I think, later in our stock segment, but certainly some big gains there. Big gains in aerospace. That's Boeing's group. Big gains in gambling, up 6% today. So a lot of those beaten down groups certainly continuing their recovery on today's trading. That's our market recap for today. A lot of movements, and again, just continued upside for stocks. Let's go into our next segment, which is called sector setup. So what we love to do every Monday, look at sector rotation. We're going to start with the RRG, and then we'll look at some of the individual sector charts. As a reminder with the RRG, we look at this a lot on the show. Usually every Monday we'll look at this. If you're not familiar with it, look at Julius de Kempener's blog. Look at his show Sector Spotlight. It does a great job of illustrating and describing this visualization. I've used it for a number of years, and it shows the 11 S&P sectors rotating around the benchmark in the middle. This is looking at weekly data, so I look at a little longer term view of this because I'm trying to just understand the big picture secular rotations in these sectors. And what I'm seeing here is what we talked about looking at some of the groups that were rotating lower, right? If you look at technology, the XLK now in the weakening quadrant for the first time in quite a while. Healthcare also in the weakening quadrant. Consumer staples in the weakening quadrant. All three of these are heading southwest, which is the direction of deterioration is what I would call it. What is improving? It's the XLC communication services, the XLY consumer discretionary, probably the most attractive out of these in terms of outperforming in the leading quadrant, heading the right direction, really emerging in a position of strength. And as we look at some of the charts within consumer discretionary, Gap comes to mind as a good example chart we'll look at. Just fairly constructive at key levels, and a lot of them facing resistance, things like Nike and others hitting potential double top patterns. So we'll look at some of those together, but overall the performance has certainly been there. The really interesting ones are these emerging groups coming in from the southwest, heading now northeast. Industrials, financials, energy. Energy has been the big outlier. It was way down here in the lagging quadrant, has now rotated way up here in the improving quadrant. And again, if you look at the average energy stock, it's had a pretty incredible run. And again, the question with all of these that have had big runs out of beaten down levels, how sustainable is that now, right? They can't go up forever. So at what point do you expect profit taking? Do you expect some sort of a pullback? Haven't necessarily seen it yet in these energy stocks. They've held up pretty well and up pretty good again today. But we'll look at some of the charts together and see where it's at. But this overall theme is a rotation into these more value-y areas like banks, like energy, away from some of these growthy areas like technology and healthcare. And think about that growth to value chart potentially rotating the more and more of these things are rotating in the manner that they are. Let's look at some of the individual stock charts. Get this guy out of the way. Sector charts, excuse me. So, when I'm looking at the candle glance page, my goal is to just, again, take another step back, sort of look around and see what patterns emerge. So what's interesting to me doing my weekly routine looking at sectors are a couple things. Number one, you have a couple sectors that are at or near all-time highs or long-term highs. And the question is whether or not they're going to be able to break above and push higher, or whether this ends up being one of the most incredible double tops in human market history. Consumer discretionary is number one, pushing to a new closing high today, which is really impressive. For the XLY, as I'm looking at it yesterday, I'm saying, boy, Friday's high is right at 132. The high from February is right at 132. This seems poetically like this beautiful point at where things would top out. Price has gone higher though, so the price has actually gone to new swing highs here. So that is number one. The second one would be technology. And those are the two that come to mind here, right? So tech has not quite broken to new highs. The relative strength has rolled over pretty significantly in the last 3 to 4 weeks. So, this is a bit of a change for tech, which has been one of the most consistent outperformers for quite a while. So I think the sector charts to start to watch, if you're not already, are the XLY, the XLK. For the XLK, is it able to eclipse those previous highs and remain above them? For the consumer discretionary XLY, is it able to maintain this breakout that we saw today? If you'll indulge me for just a moment, I was actually just thinking, I wonder what the RSI is. So I was kind of wondering that. So I'm looking at the weekly chart now, and the weekly RSI is potentially a bit of a bearish divergence here, where you see higher highs in price and lower peaks in the RSI. Now, it's a little too early to declare that a bearish divergence because you need to have this high confirmed. During an uptrend, this could continue higher for the next month, and it won't be a divergence anymore. So you can't quite call it that. But it's at this point, price is going to new highs, and the RSI is not confirming that. If that continues, if we get a rollover in price, we get a pullback, and the RSI has not gone higher, that will look like an incredible bearish divergence. Not quite there yet, but that's something I'm going to be watching for sure. Let's go back to the candle glance page here for a minute. So then we have some sectors that are sort of testing their 200-day moving averages, and these are a couple. This is the next bucket of sectors that I would be paying attention to. Financials number one, and the fact that the financial sector is testing its 200-day is nothing short of a minor miracle, because 2 weeks ago it was way down here, sort of in this choppy no man's land. It felt like the poster child for a retest of the lows. And then all of a sudden we had the S&P resolve higher out of that bullish flag pattern. The XLF just starts gapping higher, pushing higher, and that reflected on a lot of the bank charts, which all of a sudden started to look so much more attractive than they had not too long ago. Friday, we sort of traded above the 200-day on the XLF, closed back below it. Today, we're back above it. So you need to see some sort of follow through. And I think that's with the XLF, what I will certainly be looking at in particular. The relative strength, though, you can see how it's broken to a new relative high for the last month. Love to see that continue if you're thinking of financials as an upside bet. But at this point, it's all about where we're at relative to that 200-day moving average, just like we talked about with the S&P 500 a couple weeks ago, testing the 200-day at that key 3,000 level. Financial sector a little bit behind there, but now right at that point. And so I think the question there is it able to break above, maintain the breakout? Energy, not quite there, but has had a similar gappy jump to the 200-day moving average. The relative strength has been amazing. Again, what concerns me with something like energy is the risk reward after such an incredible run. I mean, are you assuming that that pace is going to continue until it gets back into that range from most of 2019? I'm not sure. And at some point, you'd expect a little more of a pullback than what we've had so far. The fact that so many stocks are overbought right about at this point tells me we're pretty close. So energy is the second one that I would watch, sort of a sector testing its 200-day from below. The third one is the utility sector, and the XLU certainly pushed higher there today, a nice rally above the 200-day. The question is, do we get a follow through? Do we get a maintenance above? Do we maintain that 200-day? On Friday, as I'm looking at this, I'm seeing resistance from April. We've now broken above that today. Do we get the follow through the remainder of this week, or is that last gasp higher before we go down? So 5 of the sectors I think are at really key points, and I think their ability to break above resistance, maintain that positive momentum is going to tell you everything you need to know about the broader S&P 500. We're going to take a quick commercial break. Back with my next segment, shifting stocks. We'll see you in a minute. Hello, everyone. Welcome back to the show. This is Dave Keller here at StockCharts.com. As a reminder, we love to answer your questions. The last couple of weeks, really, we've had so many great questions from many of you. Really appreciate being able to help you navigate this market. There's so many things that, if you're using the charts more and more, there's so many questions that can naturally come up. So just shoot us an email, thefinalbar@StockCharts.com. We have a mailbag segment queued up for tomorrow. So we'd love to answer one of your questions on the air, look at the charts together. Our next segment is called Shifting Stocks. So the third piece of our Monday routine is looking at individual stocks. And as I've mentioned in previous weeks, every Sunday, I try to go through the entire S&P 500 chart by chart, something I've done for a number of years. And if you combine that with a good macro discipline, it can be really, really helpful, because the S&P chart, the Russell chart will tell you one thing. It'll tell you what the overall market is doing. But by looking at individual charts, you will start to feel how the sectors rotate. What I've seen over the last couple of weeks is this rotation away from tech and healthcare, rotation into financials, energy, some consumer names. And that clarity comes from looking at those individual charts every week. So what we're going to do is bank through as many of these as we can. I tried to jot down some ones that I thought were at key levels to pay attention to. But what you'll find, the consistent theme I would say this week is stocks at or near key resistance levels, pretty much at or near overbought conditions. And that tends to be what tops are made of. But as a trend follower, as long as the trend continues positive, I'm going to want to own those charts. So that's sort of the balance where I think we're at. We'll start in order. Communication services number one, Charter CHTR is right at a key resistance level. So this is either setting up to be a huge breakout if we break above resistance around 550, or this ends up being the most beautiful textbook double top in the history of charting. And this is what I'm seeing with a lot of charts. Microsoft, other charts across sectors look a lot like this chart of Charter. So it's interesting that the first chart in my routine is similar to a lot of those names. So we've had a bit of a pullback. Today was a nice rally. It was up almost 2% today. And again, it's all about whether we're able to eclipse those February highs. If we do, and if you see charts like this break to new highs, I think you see a new influx of buying, unlike what we've seen in quite a long time. Now, things are not necessarily all overextended like this in terms of testing their previous highs. A lot of charts, the second group of charts I'm seeing within comm services are things like Comcast. This has had a pretty incredible run. You can see the relative strength holding up pretty well. The RSI is overbought. It's an RSI of 74. It's just broken above its 200-day moving average. Yesterday, as I'm looking at, I'm seeing this, what you call it's actually a gravestone doji candle, which is basically this, big uptrend, and then you sit back and the open and close are identical right at the lows, and that tends to be a negative pattern. But boy, today we just reversed and closed above the previous high. So certainly appearing to show upside follow through above the 200-day moving average. Whether charts like Comcast are able to hold that and maintain it, I think is really interesting. The other one I'll show you in communication services is Facebook, a name and a chart that's probably familiar to many of you. Here we have the high from January. You can see that lines up from the swing low we had after this breakout. So Facebook's already broken to new highs, has pulled back to that level. And so I think that level right there, just above 220, maybe 221, is really the key. If Facebook can hold above there, I think that's pretty impressive. That tells you the overall strength of the market. If it breaks, if charts like that break that support, that's going to be a concern. Let's rotate to consumer discretionary. Gap, I will summarize the entire sector in just a couple charts. There are a number of things like Gap that are broken above their 200-day moving averages. They're all overbought. And so my concern with that is overbought means up a lot. It means it's gone up a lot. That's a good thing. So overall, that on its own is not the end of the world. And you'll see things here like last October where it became overbought, pulled back, and that was just the pullback before the next leg higher. So when it does become overbought, that just puts it on the list of things that could potentially be getting overheated. We'll have to see if we get a rollover, and a rollover to new swing lows is what really tells you that the trend has reversed. But at this point, it's sort of there. It's interesting. A number of the car companies in interesting configurations. Ford actually testing its 200-day from below, extremely overbought, an RSI above 80. That usually means a bit of a pullback before the next leg higher, and Ford and GM are sort of in that similar sort of bucket. Nike NKE is similar to Charter, which is testing its previous highs. Again, this could be the beginning of a huge breakout with an influx of buying that pushes this to new heights that we have not seen before, or it is setting up to be an incredible double top pattern on the weekly chart for sure. And the RSI is just overbought here as it retests those previous levels. So if nothing else, the traditional outlook would be you'd expect a bit of a pullback here for sure. Don't have time to go through any more of those. We'll switch sectors. When I'm looking at consumer staples, ConAgra, CAG stands out as something that could be this beautiful cup and handle like pattern. It's not the idealized cup and handle system as much of a rounded cup, but overall that's basically where you set a key resistance level, you retest it then on a shallower pullback. That's your sort of handle of the cup, and a break to new swing highs, a break above 35.50 would confirm that, and that usually measures as a big base breakout, a much higher trend. That's a traditional William O'Neill Investors Business Daily approach. Also within consumer staples, you have a bunch of things like General Mills, GIS. When I was looking at them yesterday, I saw them retesting their 50-day. A number of them up pretty good today. That's up, a little less than 2%, but up pretty decently today. These have all underperformed because these are some of the stocks that did really well in the market pullback, but they've all pulled back to their 50-day moving average. So GIS and some others kind of looking like as all else being equal at kind of that buyable point, a nice uptrend pulling back to previous to a 50-day moving average. Previous support levels could be an interesting entry point there. When I'm looking at energy, a couple stocks stand out to me. Something like Noble is probably a good poster child for the overall sector. This is a stock that's run up pretty well. It's broken to new swing highs. Overbought, and again, on its own, that's not the worst thing in the world. They're breaking to new relative highs. But the fact that all these stocks are overbought tells me to start looking for some signs of a rollover. It's up 12 to 13% today. So, I'm not seeing the rollover today. But if you look at ConocoPhillips, I'm seeing it's overbought at its 200-day moving average. So again, it just tends to make me think about a short-term pullback. We're going to look at a couple more charts here, and then we'll probably be out of time. I think within the financial sector, BEN is Franklin Resources. Nice breakout above its 200-day moving average, nearing the extreme overbought level. When we did the pitch a couple of weeks ago, maybe not a little bit more, I remember pitching BEN, and at the time I started to think it was a really bad idea because you had these engulfing patterns, these rollover patterns, but since then it really emerged and has outperformed. And again, I'm just concerned with the overbought conditions and seeing whether or not there's staying power there. Within healthcare, I think you want to be careful with a lot of these charts. Amgen comes to mind. It's something that's underperformed. A lot of the biotech names, and not just in biotech, but other groups within the sector showing a little bit of weakness. Amgen, for example, testing the previous highs there in April, testing it again earlier in May, coming back, and now it's at a decent pullback point. So if you like the long-term biotech story, could potentially be at an interesting level. Regeneron and Vertex are names that are a little more positively laid out, sort of having nice pullbacks within longer-term uptrends. But biotech as a space, kind of interesting to look at. We're out of time, but I'm just going to show you a couple more charts very quickly, and then I promise we'll wrap here. Within the industrial sector, this sector has exploded to the upside. The airlines are up huge. ALK up again, another 17% today. This is after Friday. They traded higher at the open, but sort of closed in a position of weakness. And my question over the weekend was, do we get follow through to the upside? And they've all broken higher again today. Alaska Airlines now extremely overbought, which traditionally means a bit of a pullback due, and then at least one more push higher, and that's on a relative strength that's exploded to the upside, which is pretty impressive. 3M, I think, is one of the more key charts to look at in that sector because it's approaching previous highs. It's overbought, starting to feel a little bit potentially at the point where a top would emerge, but we haven't seen it yet. And then finally, within technology, a lot of these stocks look like APH. Amphenol, this is in the electronic components, but this is basically round-tripped from its early 2020 highs. We're right back there. We're overbought. And again, technical analysis 101 tells me to want to fade a chart like this and expect a short-term pullback. But I'm going to want to see if that actually plays out if we start to see some further short-term weakness. That is a tear through a bunch of stocks in just a couple minutes. I hope you found that an interesting run through. And again, as always, I hope this show inspires you to dig deeper into a lot of those themes and do some of your own work, but hopefully I can give you some illustrations, some examples of what I'm seeing. Folks, it's the 3 and 3. Let's wrap the show. So chart number 1 is that market trend model. We talked about this a little earlier in our macro segment. If the week ended today, I update this model every Friday after the close, so it was still bearish. Today, with the move higher, sort of solidifies that the long-term trend now identifying as positive. The short-term and medium-term have been positive for a while. It would be so poetic if the market topped out just as this model turned positive. That's my skepticism of models, but I followed it and I will continue to do so. Chart number 2 is the XLK. We focused on sectors a little bit today. I think the XLK is at a key point, this 102 level, which was the peak from February. We're nearing that exact level as we become overbought. So the relative strength has deteriorated, but is this going to be a break to new highs? Does it follow consumer discretionary and follow the momentum higher? Or is this the ultimate double top pattern as the market starts to roll over? I think you want to see some signs of weakness first, and we haven't seen it yet from any sort of breadth measure that I follow. Finally, the XLF, the financial sector. We talked a little bit about sectors like this testing their 200-day moving average from below. So you have the XLK testing all-time highs. You have the XLF testing its 200-day for the first time since last February, and as it becomes overbought. Do we see a bit of a pullback? I would expect that in some form in the near future, but are we able to push higher through there? I think that's the question for sort of a value-oriented trade, betting on the strength of something like financials. Folks, that's our show for today. I love Mondays because I love the 3-pronged approach to market analysis. That's sort of a summary of my process. I hope you found it helpful as well. As a reminder, we'll do a mailbag segment tomorrow. So get us an email, thefinalbar@stockcharts.com. Ask us anything you want, and love to answer some of your questions on the air. Also, check out all of our previous episodes on our YouTube channel for StockCharts.com. We have so much great content for you. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.